Another Saturday, Rob. Here we are, brother.
Woohoo! Yeah, another week down. Another good week down. It was good.
Welcome, everybody, to The Edge. We are your hosts, as usual, Ryan and Rob. We're here to have a little coffee and make some people laugh and talk some charts. Fair enough.
That's what people live for, charts.
That's right. That's right. If you're a DJ like us, that's absolutely what you're looking
That's exactly what you look for. Oh, and you can see in my little coffee cup when I tip it up, it's got little rings on the bottom.
Yeah.
That's because it's like my electric coffee cup that keeps my coffee warm.
Just seeing that. Does that sit on like a warmer? Does that keep it warm automatically?
It keeps it warm by itself, and it does have a little coaster that it sits in that recharges it. So it's got a little battery in it.
Look at you. Okay. Thanks,
But
yes.
this thing, it sounds so ridiculous because it is. But let me tell you, for trading, it keeps my coffee warm. So if like I'm in the seat, looking hard, and 30 minutes go by, I don't take a sip of coffee, and then I grab it again, it's always warm. So it's actually saved me from getting up and down and going to the microwave.
That is awesome because
it sounds ridiculous.
It's cold all the time. And it's
ridiculous. This is stupid. I bought this for myself for Father's Day last year, and
best gift you've ever
best
given?
Gift for myself. Like, this thing is, and I know it's ridiculous. Like I get that. Like, this is stupid. I'm a meme. Yeah.
Well, that's great. And I assume you put high quality coffee in.
Yeah, I do actually, because I'm weird.
It's not weird. I'm a super big coffee snob.
So I'm from the Pacific Northwest, right, where coffee drinking is like a national pastime, and there's so much people drinking coffee that the salmon are literally caffeinated in the Columbia River from everybody.
Are you talking about, like, when you say Northwest, you mean like Oregon?
Yeah, I'm from Portland originally, and I like coffee, but I don't like all the jitters of caffeine and things like that because I'll just start drinking. So I drink decaf, and
we can't be friends.
We can't be friends. So friends don't let friends drink decaf. And the problem is the process of decaffeinization, like, usually uses chemicals and things like that, and it's not good for you if you drink a lot of it. And so I, of course, then have to use this like Swedish water method of decaffeinating my beans. So I order my beans. I have like this subscription service to this place out of Portland, and they sent me every 2 weeks a bag.
This is over the top, you know that.
I don't know what you're talking about. These are
go ahead. This is the first time
choices. I don't have any problems.
Please continue, because I've never heard this before. So please. So how do you decaffeinate a coffee bean? Like,
I don't understand like the Swiss water method entirely, but they don't use any chemicals to crack open the bean versus and it takes longer, and it's a much more drawn out process because it doesn't use any of the chemicals like formaldehyde and stuff like that you would use previously. So like when you buy cheap decaf, not that you ever would even do that, but like there's a reason Sanka is no longer sold in the United States.
I like real drugs, and so I tend not.
But yeah, I'm super weird about it. And I'm super sensitive to caffeine. Like, I even drink decaf soda, like when I'm on the road or whatever. Like, I'm one of those Mormons who drinks like the diet decaf.
Really?
Coke. Yeah.
Okay, I learned something new today.
I'm not going to say you're better for it, but you've learned something today.
Yes, for sure, absolutely. So another funny thing is when I first sat down, I had my Cubs hat on or whatever, and he's like, "Oh, I thought you were going to sit down with your Jag Show cap, right?" Mm-hmm. So I had to go get my beanie because it represents, as we all know now, right? So we had a great week. The week was awesome, and then we are expecting another big week. We have a very good read on the market, and so immediately you're like, "All right, put the Jag Show hat on because it's time to show out." So, Jag, this is for you, baby. This is cash for you. We're gonna get your name up here at some point. I'm working on that. It's Rob's idea. He's like, from now on, we got to make that happen. So
that's great.
So, Rob, let's kick around a few things. I mean, we were talking about areas that we should go. We were talking about Japan. We were talking about the yen trade. But first and foremost, and I know that this is going to kind of throw everybody off, and we were talking about it last week a little bit. You are developing an algorithm. You are working on porting this from TradingView over to Sierra so that it can automatically execute, et cetera, et cetera. And I asked yesterday for you to kind of give me a look behind the curtain, and you showed me 800 lines of code that wasn't quite done yet, but I was asking specific questions, and you threw a word out there at me that I have been digesting pretty much all night. And please explain it, say the word, or say with this quadratic, is that?
Quadratic rational function.
Please, like, would you mind just, I mean, so here's the thing. I asked him, Rob has created a moving average line that is basically adaptive to market conditions. It's constantly moving. It's not like a 20 period SMA or whatever. This thing is constantly looking like a bar or two back, and it's always, adjusting and making things, right and new, which is super cool because it's almost like machine learning ish in a way. So I asked him to explain how this works, and he gave me the cliff notes. And please just keep it very, very cliff notesy, but hit us, man, because this thing is like, I think stuff like this is so cool.
So yeah, so like everyone's used to normal moving averages, where you pick in a period and it just calculates an average over, hey, these 8 periods and divide by 8, and this is kind of like the midpoint of all of those data points. Or even an exponential or weighted moving average, which puts more weight on the most recent data points to, this is more recent, therefore it has more data in it. And so what I was looking at was something that we use to try to like optimize in for different functions. And so I use this rational quadratic, which basically takes and smooths the data, smooths the line to match the data. And so when the data gets pretty far out, it's almost like a linear regression kind of thing, where you're trying to optimize things and find the tangential values. So the thing will
tangential value
to get it so that the curve matches price data a bit more cleanly. And that's exactly what we created for our little algorithm, was a quadratic function that does that basically is always adapting to the data. And so it doesn't have the sort of limitations of a super long moving average period that takes, basically, if you want a moving average, you have to take it and divide it by 2 to say it's going to take this many lines to kind of turn around. So if you have a 200 period moving average, it takes about 100 lines for it to really start to roll or do anything. And so we wanted something much snappier in that. And that's what we came up with.
So I have to say, there's a saying, Warren Buffett says it, and a lot of other people, that if you want to succeed or you want to, advance in life, you always surround yourself with people that are smarter than you. And so, my soon-to-be wife is extremely brilliant. She graduated from Northwestern, and she's very to-do in her career. And you obviously are, extremely, how do you want to say? I don't want to say accredited, but you are, your credentials are insane with your previous, education, but also your job and what you've done with the Air Force and so on and so forth. And here I am, like, I barely graduated high school, and I, dropped out of college because I couldn't keep my dick in my pants. And so, I had a kid instead. And so every day when I work with you, and, I learn all these cool new words, and I love it. And for me, other people might know what this stuff is, but I think it's wonderful to share. And I think that you are just amazing in the things that you do.
Thanks. No, it's really fun. Yeah, we get a lot out of it. And I love working with you and learning, you've got, like we were talking about today, and we'll go over it during the review, but like how we even determine a leg end and sort of the art versus science of it. Because I have an approach that sometimes can have, I always say, too much precision, and the sort of engineer in me wants to be right. And this is the kind of way it should be. But we're, looking at, you have to find out where this movement in the market really happened. And it may have started here. That's sort of a sub leg, but really it's the meat of it was here. And this is where we tap back to move forward. So yeah,
cool. I appreciate you trying to give me some value.
Give some
very
value.
sweet. It's very nice. Last week I learned all about baboons and their
that's right.
Brought over to Africa, some random trivia shit. And bro, listen, I showed Aggie that, and we went down a huge rabbit hole with that. That literally led to like a 4-hour Google search discussion. Like,
oh no.
Oh, she
So
takes
she's like, why does Rob know this? What part of his
and then
brain?
once she grabbed onto it, it was like she just couldn't like really.
He has problems.
Yeah, so
Yeah,
thank
she's
you
probably
for that.
looking into DSM-5 to figure out what sort of like mental health issue or disorder I have. But
Well, you mentioned something about some sort of like DNA, something that they were using to analyze like
yeah,
our
yeah, yeah. They're
reproduction
tracking
from
the DNA of
stratium or stratium. Or,
strontium. Yeah.
that's it. Yes, bro. Listen, that word kicked off the whole thing. She's like, so now I have to know, right? So that was a
Oh, that's
shame on
really
you.
cool.
Shame on you.
Was having a nice evening.
Right. So listen, just to get back on topic here, right? So
That's
we
right.
were talking about, we were talking about Japan, right?
Mm-hmm.
So first thing when we got on here, like, what do you want to talk about today? And you're like, well, let's talk about the market. Let's talk about, this sell off. And then they kind of bought everything back and everything kind of filtered back into Japan, into the yen trade. The yen has been just like parabolic lately because this thing has just been getting slammed for years, right? So you and I both know that Japan, the way that they have
Yeah.
their economic policy set up, it is deflationary. I mean, it is intentionally deflationary, right? And so the yen has just been getting beat forever because it's supposed to. Like, I mean, that's how they
By
essentially
design.
it's essentially how they created it. I know it sounds
The Bank
stupid,
of
but
Japan just doesn't believe in interest rates.
right, right, right. So I don't know if they can. I don't really understand their economic, like how the whole Abenomic things works. But they've had a rate raise this last week or the 2 weeks ago. I don't remember what it was, but it was within the past 30 days. They had a rate raise the past couple of weeks, and people started buying the yen and selling the USD pair, and after this thing had just getting absolutely annihilated, now we're going the other way. And when you look at the chart's going to make perfect sense, which we'll soon share with everybody. But, I wanted you to kind of touch on a few things because you brought to my attention that, which I didn't know, that Japan is like the third largest country by GDP. I mean, please enlighten me. Give me some of this trivia
Give you
that you
sort of
have
random
regarding.
trivia.
Yeah.
Living in North America most of my life, you sort of tend to have a North American sort of view of the world. United States is huge. Russia's huge. It's got a lot of people in it. But when you like distill things down, there's this circle on the globe here. And 50% of the world's population lives in this little circle on the globe. So there's a tremendous amount of people concentrated in this area of the world. So this is, you've got the Philippines and Indonesia, parts of China, and also parts of Japan in there. So this is a very population dense, obviously economically important area of the world. And so just to sort of set it up with context, like that's where 50% of the people in the world live. So just kind of like putting that out there to show how important this region of the world is for the economics of the world.
Well, I'm clearly a ignorant American because I didn't know this, right? I mean, I'm not saying that I thought we had the most population, but I certainly just assumed that. I mean, I never in a million years would have guessed that half of the world's population lives in this little bitty circle. And you made a great comment to me earlier about Taiwan, and you're like, well, this is why like when people are like talking about this whole Taiwan semiconductor thing, yada yada. You're like, that's why it's a big deal. Please.
Yeah. So when you've got this area that's becoming sort of a hotbed and disputed, especially with the semiconductor industry, and TSMC, the biggest semiconductor company in the world, produces all this great chips that are below 5 nanometers and things like that. All that stuff makes this area of the world exceptionally important, aside from just the economics of it and the population density that we have in that area. You couple that with looking at the GDPs of different countries in that area. One of the things that a lot of people don't appreciate is, although Japan comes across as this country on an island out in the Pacific, it is the third largest country by GDP. So $4.25 trillion of GDP. Now that obviously is much smaller than the United States of sort of 25, but it is the third largest in the world, ahead of Germany, ahead of India, and ahead of the United Kingdom. Um,
And that blows my mind. I'm going to be quite frank with you. I didn't realize that. I mean, just in my, as my son would call it, my feeble mind, I would
Your
have
son's much
assumed,
nicer than my kids are.
I would have assumed that. I mean, there's plenty of places that I assumed were bigger than Japan, like India or United Kingdom or Germany for that matter. I mean, the fact that Japan is above all these is kind of mind blowing to me.
Yeah, so that's why, like, when they talked about interest rates with the yen and blowing this yen carry trade, which obviously you have to be, basically a bank to pull off this yen carry trade, which most people talk about like it's an everyday thing. Like if you're borrowing a few $1 billion to then, put your company or invest.
right.
Like it's not like Joe Sixpack going down and getting on Robinhood and taking a yen carry trade out. Like that's
right.
that's not a thing. Um, but they'll say it's possible, sort of. But yeah. So yeah, when we had the threat that Japan was going to raise their interest rates even a little bit because they've been so low, their economy is big enough, and that region of the world is important enough. It really does send some aftershocks through, which caused basically the U.S. market over the weekend to then dump down, a fairly reasonable drop and gapped way lower from that prior Friday. So I think at the end of the day, we were basically 10% down from the high.
Yeah, which is what we talked about. It's a legit,
and that's a legit, and it was interesting because on Monday morning when I looked at my news, they were actually talking about the Nikkei and sort of free fall and the world is ending and is your money in your 401k safe and all the things that the news does to like make this a bigger deal. And I felt like once we got down to our certain technical levels, that then supply and demand economics of the market would start to like kick in again, and basically that's what we have basically fully recovered from Friday. It took a week.
Well,
but
I don't know if you saw the news, but like on Thursday, the Nikkei was up like 11%. I cannot imagine an industry being up 11%. I mean, we've seen stocks do this, we've seen crypto do this,
but not a whole index.
Wow, like that is super impressive.
Yeah.
Imagine the 0 DTEs on that thing.
That would have been good.
Right? Those things like,
so that was the sort of like, Monday morning, the world's ending and the news can't talk enough about, what the state of the world is. And then we finally kind of like calmer heads have failed. And
so I'm going to
moving back.
I'm going to speak from a level of uncertain knowledge here, but I know that you are, you know the answer. So you're going to fill in the gaps here. But I guess from what I understand, and correct me if I'm wrong, that Japanese money before they raised the interest rates, I mean, they were zero or even negative at some point, and it was to the point where you could literally borrow Japanese money for free or even get paid for it, and then take it and invest it, like let's just say in the Aussie or the UK, and you could make a pretty good return on just the difference in interest, right?
Right.
And so
you could just
it
make
was
a
one of those
return on the interest rate.
Right. So it was one of those trades where, and we're doing the or in the US as well, right? Like rates are 7%. And so you can take free money and then just put it in the bank. And before you know it, you've made 5% in there somewhere, just as an example, right? Rough math.
Right.
And then, now you have Japan who's essentially raised rates. And so it kind of fucked that whole trade up.
Right. Exactly.
Yeah. And so I was under the impression, and again, this is based on what I read, but that essentially that they were selling, when that happened, that it was time, people wanted their yen back. Like it's time to flip that trade back around. And I guess, am I speaking correctly or?
Yeah. So they needed to sell their US dollars and buy yen.
Right. So here is a chart of the yen on the left. These are CME futures. And then here is the USD JPY pair. So just for those of you guys who are unfamiliar why there's two, one's a Forex pair and one is the actual currency itself, right? And so the left is the actual currency itself based on how much it's worth per the US dollar, whereas the other way is the US dollar via yen. So, it's like you got 146 yen per dollar, essentially, if that makes sense. Am I saying that
Yes.
correctly? Okay.
Mm-hmm.
So just from a tech, the way that you and I chart, and it's funny because guys in the room like Piper and stuff, they were all over this trade. This from a technical standpoint, this leg end right here could not have been any sexier, right? And
Yeah.
the world was falling apart, and Japan's falling apart, and really all we did was come play the leg, right? And it's really
Exactly.
super interesting because, and then up here we have the leg down, and it happens to be a monthly level, and we come up here and we tapped it perfectly. I mean, it's like,
Yeah.
it doesn't get any better than this. And so for us, I mean, it was a classic textbook, technical analysis play, right? But it's really interesting how the whole thing pans out, and people have all these theories and yada yada yada, and Bank of Japan intervened here and whatever, right? So I just wanted to show from a yen US dollar currency perspective, kind of where we're at with this whole thing, and all that. And to be quite frank with you, I mean, this thing really could continue to march back up. I mean, we could, come
Oh
up
yeah, but
one.
I think what caught a lot of people off guard was just the speed in which it happened. But even still, it wasn't like the end of the world.
Forex is
You know
usually
what I mean?
really slow, right?
Yeah.
Currency pairs don't move at an extreme rate, and this was, needless to say, I don't want to
That was
call it
fast.
a black swan event, but it's certainly completely out of the ordinary.
But you can see within the course of the 1 week, it's actually ahead of where it was.
Yeah, I know. Which is funny, right? Because we talked about, when we get into the market, the U.S. market, we did the same exact thing, right? Like we literally are exactly at where we closed last week. So it's almost as if like the whole week didn't happen.
The whole week didn't happen.
Yeah. So when you go into it, it looks pretty interesting. But I thought this was important to show for a lot of people, because the yen trade is kind of like it's in discussion now. It's on social media, and people are really paying attention because Bank of Japan never raises interest rates, ever. And so the fact that they did that a quarter point is interesting. Do you have any theories behind the purpose for that? Was that simply just to stabilize the yen, do you think, or what?
I believe so. I haven't looked into it too heavily. But because of their aging population and population decline, and they've got a bunch of like sort of internal things that they're trying to have to balance all the time. And Bank of Japan has been pretty strident in keeping their interest rates incredibly low, which has just caused a bunch of stagflation, inflation issues, and things like that.
Well, it's interesting that you brought up the population issue because, obviously Elon Musk is hot on that topic, about, their decreasing population. And it's interesting because a lot of the decreasing population issues over there are really, they're saying they're related to a couple things, which is them working a lot in video games and electronics. Like people are becoming less social and less like antiquated with each other because they're so stuck in their, I know, right? Shocking. Look at my kids. I can fucking see it. So, but I just saw actually, this part totally blew my mind, Rob. They have visas in Japan now. They're called breeder visas, and you can get a visa to go over there and help repopulate. I'm not kidding.
Wow.
I'm not kidding. So I thought that was really interesting. I'm like, wow, because I was thinking about going over there and helping see what
that's gonna do my part.
Yeah, right. But now it's like legit. They're like farming for people. So I think this is a great opportunity for to go over there and make my mark. So Japanese chicks are small anyway. They're cute, so I can get down with that. Right? That's right. So
I will have to look this up.
So this is a Ministry of Foreign Affairs for Japan, designated activities, future creation, individual spouse. Right? This is real. Like this. They're having this much. I mean, listen. Not to sound like. I hate to say it like this, right? But I'll probably get a lot of slack for saying this, but I don't give a shit. They're really watering down the Japanese if they allow them to do this. Like they'll essentially, won't be any purebred Japanese people if they allow people to come into their country and kind of water down the situation here. You know what I mean? And again, they're going to do what they have to do. And, the same things happened to Europe over thousands of years, where you had like Polish or Slovenian or whatever, where like even Russia and China are so close to each other that when you get to the borders, that a lot of the races are intermixed, where you have Russian people who look Asian.
Yeah, I mean, definitely the world is becoming more homogenous, and
Absolutely,
and
but I'm sitting here thinking like, man, that's sad. Like, man, there won't be any.
yeah, there's a part that's like there's this Japanese culture that you don't want them to lose. Yeah,
of course. Like, I mean, the whole samurai culture is like going to go down the toilet. It's a shame, because I am so big into feudal Japan, and like the way that they, used to carry themselves and the discipline and all that. I absolutely love that. So, anyways, I thought this was really interesting. So it's not exactly called a breeder visa. It's called a designated activity for future creation. But I thought you'd enjoy this.
Future creation of individual.
Yeah, I just can't believe it. It's unreal. All you have to be is 18. You have to be looking for a job. You can stay in Japan for 2 years. You got to have 200,000 yen in savings. So I don't know what that means, $50 or something. I don't know
exactly
what that comes out to be, but well, we know it's like 100. What did the chart say? What was the yen? The yen was 150.
You have to have like $1,500.
That's it?
Yeah.
Okay. Okay. So the requirements are pretty low. The bar here is pretty low.
You have to have the equivalent of a weekend in Vegas saved up.
Yeah. You got that? You can create a child in Japan, no problem.
And leave and punch out after 2 years.
That just shows you what situation they're in, right? So
yeah,
like, come one, come all, come stick your Peter in our It's like crazy. Let's just get right to it. I mean, let's talk about the market. This is going to kind of be our outlook for, I would say, at least the next week. And let's just talk about like what's super important and where we might be headed. And before we get into the ES, you had a great ideas just to kind of do a high time frame recap of SPX, SPY, and not really a recap of what's happened, but more of future forward look. And that way people can kind of get an idea of, what we're thinking here. And what would you like to do? SPY, you want to start with that?
Yeah, let's start with SPY.
All right. Speaking of leg-ins, we showed about how the one on the yen trade played. And here we are again. So, we have essentially this valley, and here's our leg, right? So this was our monster leg in down here, and you'll see it on ES, SPX, obviously SPY is what we're talking about here. And, we have this leg up, and this was essentially how it went. And so getting below this, if everybody recalls last week, we talked about how getting underneath this area was extremely dangerous. And if they got underneath this area, there was a good chance that we'd visit the leg end. Well, we did exactly that because we gapped much, much lower. As you can see, actually, on the week, we opened up down here, which is pretty wild, right? And so they essentially opened up down here and kind of did their thing. We opened up at the leg end, which was insane. So here's the thing that you and I were talking about, right? This was the prior week's close, and this was last week's close. And, we closed here, and then yesterday we closed here. We've done nothing for a week. I mean, yes, we had this insane like push up and massive amounts of volatility and 150 point days, whatever. But at the end of the whole ordeal, we ended exactly where we were at the prior week, which is pretty outstanding, I have to say, because, we fell ferociously fast, only to come right back where we were net zero, essentially.
And essentially it happened all over the weekend, because you can see where that weekly opened is right down there in that gap area where you're talking about. We opened down there and it looks,
Yeah.
And all the way back up.
People were crying big time. Like it was, the world's coming into an end type situation here. So, but I have to be frank with you, Rob. Now that we have gone all the way back, and here's my sub leg to the highs, I couldn't be more bullish. I mean, I just don't think I could be more bullish. And I know there's a lot of talk that people don't believe that this, dude, I could not be more bullish. And I'm going to show you exactly why. And really, it really comes down to, and I'm going to go into a little bit more detail with this because you're going to see the same pattern on the SPX and ES. but this way you can see it. I would have been super bullish if the weekly closed above this 527, but it did more than that. This weekly closed above the support right here, that it was, the top down support. I mean, this was a monster fucking close. I mean, this is like not to be toyed with. And so in my opinion, I think this thing is set to come at least up here to the 544, which is our next weekly. And we're going to kind of get down into, a little bit more granular. And you actually have a target that's about 80 or 100 points up. And then I think this is the extreme side of the target. So let's just dive into that right now. So, all right. And just to show everybody, this is a trade that we always talk about. That was in the course. It's one of our signature trades, but just look at the accuracy of this, right? So they played what we tested and wasn't game. We came down, we held the weekly, and then we popped. And yes, we absolutely did do one of these, right? But now we've had this monster close above this valley. And, in my opinion, unless we end up losing 27, this thing is it's set for higher. And I think that obviously we've kind of bumped our head on this 34 here, but this is where we're looking to progress up. I believe this is the spot right here that you said that was kind of your T1. I believe this is a gap fill, and we'll kind of get into it. ES is a little bit clearer, especially because that's what we trade specifically. But I'm really looking up here to this 547 area. So, as we get down in the smaller granular details, let's just go ahead and take a look at this, and I'll show you why that I'm saying I basically don't think I could be any more bullish. They W'd out down here. We popped up. We had this huge 4-hour support, right? We came down. We tapped it yesterday, and now we're progressing up. I mean, this can't be any more clear to me. I don't know about you, Rob, but This is like the invalidation is very clear. Right underneath this 4-hour wick, underneath essentially 28, or even to be on the safe side, if you want to call it 27.30, this trade is done, right? And then if that's the case, we're going to come all the way back down into this area in here somewhere, right? But as long as they hold this, we should progress up into probably this would be our first target. Maybe our second target is this weekly, and then obviously, as you can see, we had a bunch of taps here, and this is kind of like the main key area that I'm watching on ES as well. So I do think that this plays as progression up, and I'm absolutely going to be trying to swing this thing. I mean, we had a long, in-depth conversation about it, you and I, that, we'll go over more of it on the weekend review, but, let's just talk about this. I mean, look at this thing on a small time frame. I mean, your risk to reward here is extremely clear. We've calculated on ES, it's 20 points, could be potentially less. And your first target is 100 points, and that's a 5-to-1, which I think is more than good. But you can see we have an untested 4-hour, 1 hour right here at 5:30. And the reason I'm showing this particularly on here is because it's just super duper clear. And you'll notice that this area, this 5:30, is going to show up on SPX. It's going to show up on ES. I mean, it is just so defined. And I think it's super important for everybody to watch. So once we pop this daily, which now it's been tested again, and it was already tested before. Once we pop this daily, this thing's coming up to this next spot here, and I would be looking for some sort of potential reaction here. Even though it's tested, it was tested on the way down. And we can see, obviously, that this is a massive, move up here. We have a couple of them, but really this is the one I'm focusing on. So I'm anticipating some sort of reaction here. But again, if we get back above this area, forget about it, dude.
Yeah, then it's over once it's above that.
Yeah, it is, because then we're in that move, right? And so the idea is to come up and test, what the highest loss was. And even though for me the highest loss is 550, I'm clearly not going to ignore this 47 spot, right? I mean, that'd be foolish to ignore that. It goes all the way to the left over here. So really, 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 really like this spot. So I don't want to spend too much time on SPY. We'll get it right into it. I just thought that this was super crispy and clear to show everybody kind of like, what's happened, what the risk to reward is, the area, the last potential spot that we have that's untested on SPY, essentially to make this next move up. And I do think that this thing is going. So, I'm going to say it right now. It is very possible that we make new all-time highs. However, I'm only going to be able to call it up to here. And when I show you ES, you'll see exactly why. Essentially, it would be going from weekly to weekly, but that doesn't mean that it can't progress to new highs over time. This is our leg up. This was a 10% pullback, which is certified correction, and it was much needed correction because now we've clearly found a shit ton of new buyers, and so let's do something like that.
Bring it up.
Yeah, that'd be awesome. So I'm going to go ahead and just flip over to SPX. We'll keep it real short and sweet because I would rather focus on ES more so than anything. You can obviously see this is the same exact, shoulder that we played, leg into the high. This was the weekly close, looks very similar to SPX, right in tune with the prior week's close. We closed above the leg, the support to the leg, and the top down, which is huge for me. I mean, this is just, dude, I honestly cannot be more bullish. I can't emphasize this enough. And so, we played a beautiful daily at the high on Friday. And that was kind of the last little spot here that needed wiped before we start progressing higher. And again, you can obviously see on the SPX that we have the same spot here at 54.88.48 that got all those massive touches. And then, of course, we have our true leg down at 55.52. So this is our leg down. Now, again, this is a daily leg down, but we are coming off of a weekly leg end. So as much as I like this area, and I'm not going to say that it won't get a reaction because I am absolutely expecting it to. For me, this is a shorter term scalp now coming off of this weekly. And I say scalp, I mean, it might pay 50 points, right? Like whatever. But, I was all about like smacking the bejesus out of this thing. But now that we're coming off the leg end, I'm a little like, I don't know, man. Like, now I have to, just assume that, this thing could progress higher. So I'm going to take it all the way down to the 1 hour so that you guys can see this thing. Actually, I'll go even farther than that. Let's go to a 15-minute. I'll take it even farther than that. All right. So actually, let's do a 30. All right. So here is from the SPX perspective. And mind you, SPX is cash session only. So it's going to look a lot different. But we still have this 1 hour level over here that is just absolutely screaming at us. Okay. It is the same exact structure. We have this dip down that, clearly needs to be played. I believe this is also a 4 hour level over here. So we have a 4 hour, 1 hour area here at 53.17. They do have 53.06.78 still untested. And we're going to talk about that when we talk about the ES. All right. So in my opinion, this is going to play. We could dip all the way down into 06 down here on SPX, and you know where your invalidation's at, right? So if it's 52.97, if it's under this wick, and you start at 50, at 17, that's exactly 20 points, right? And I know for a lot of people that's probably more that you can handle, but size appropriately, nut up a little bit, put 3 micros on instead of 3 cars, right? Because the way I'm looking at it is even with 6 micros from here all the way up to our first target up into here, it's $3,000. That's pretty good. Risk 600 to make 3,000. I think I can do that, right? So, it's going to be a little longer term play, but this could happen literally, in a day or two. So we don't really know how long this is going to take, but that is essentially the look on SPX. Rob, do you have anything you'd like to add here?
I was just going to say that I expect us to keep going up, but I do expect a couple pullbacks that you might be able to get on if you miss the initial move, which is up there where we have the sort of gaps above us, I think around 54.40 or so.
Right in here.
Yeah, I expect us to get a little pullback down to be able to get back on the move long if you miss it.
Okay, cool. Well, you're an ES guy. And so I know that you focus on that primarily. So let's get right into that now because you might have a little bit more input there as far as that's concerned. So before I get started here with the 4 hour, let's just make this super, super simple for everybody. So I'm going to look at the ETH daily just so I can show everybody exactly like a very clear, crystal clear blueprint before we add all the other, lines on here to kind of convolute things. I thought that this was probably one of the best crystal clear images that I could present to people. So again, we are playing this leg almost a perfect touch. And when me and Rob dialed it in, we were able to find the perfect spot, but this is pretty damn clean, right? And so here's the deal. It is really a make it or break it for us at the 53.28 level that we spoke about, that I was heavy short on Thursday. For me, it is essentially the everything level. And if you want to get a little bit more granular, the level is actually 53.20. Speaking from a high time frame perspective, it was 53.28 on the weekly, and here is a daily here at 24. So I'm going to call the lowest part of this 20, and I'm going to show you that when we get into the 4 hour. But just from this perspective, I think it's very simple to say, as long as we stay above 24, we're going to continue this move up. Okay. If we lose 24, we're going to come back down here and test this leg in down at 41. Okay. But as long as we hold this area, and Rob is talking about a smack up in here, and we will get to that here very soon. Actually, I could probably just put it right here. If I had to guess, I'd say this is it. That is it.
That's it.
Okay. All right. So Rob is expecting a smack around 36. And he has every right to think that that's going to happen, because look how many times this is played. Okay. But again, once above 36, then we progress right up into the 33. So we essentially have a few targets, right? We have two targets. We have, our 36, which I believe Rob said earlier, we have a gap fill essentially like right here. Okay. So, this daily is like right at the gap. Is that correct, Rob? Am I saying
that's exactly right. When you get to the other chart, we'll be able to see.
All right. And then, above 36, we move into this area that just got beat up before they lost it. So I am going to get long myself, and this is going to be my two targets, and that will be my final target, even though I do think it's possible it can go higher. I mean, hey, 200 points is 200 points, so I'll be happy with that. And this was really just, I wanted to share this with everybody just because it was so well defined and so clear that I thought this was probably one of the best examples that we could give before we get so grinding into it. Do you have anything you want to add in here? Are you good for me?
No, I think it's good. You've added that 54.36 kind of area that I was like, I think we'll get a pullback there, but I don't think it's a final destination.
Excellent. Okay. So, the other one that we really liked that we kind of took a look at before was the 4 hour time frame, right? And so this is, if you recall, and I just want to, I'll kind of put this up to the side real quick, just so that you guys can see here. This 53.20, if you recall, I said, this daily here was 53.24, but the lower time frame was truly the 4 hour. So you can see where I pulled that 20 from. Obviously, when I said if we lose 24 or now 20, we would end up going down into this 41. Well, guess what? We have a significant 4 hour 37. So I'm just showing you how all this stuff kind of lines up and corresponds. And then obviously, if we push up above the 80, which we should, we move into this 44 area, 75, which, like Rob talked about, there's this daily at 36. And so they're all kind of lining up. And when we get to another chart, you'll see exactly what I'm talking about. And then obviously this daily up here, this 33.75, we have this big 4 hour at 31. So I ultimately was just wanting to show everybody kind of how this lines up and how the 4 hours are key in making this happen. And it's very obvious to me, what your risk is here. And so I would love to get a pullback into 33. I don't know if it's going to happen, but I do think that, it's pretty clear where we need to be going for ES. And Rob, this is really kind of your department in here. So please feel free to, chime in here if you've got anything that you wanted to talk about for, T1, T2, and then obviously under this, we come down and then we play this area in here. So anything to add before we move forward?
If you want, go to the ETH daily, and I'll point out something.
Sure.
The daily one.
Yep.
So just for like context, you can see when we played that 54.36 on July 25th, we came down to that area and tagged it. And that's why I was thinking we would get the pullback, because it played so nicely in the same gap area that it came down into that.
Agreed.
and gave us the lift twice. And so I think that will give us the bounce down, but no, I don't think it's crazy. Like, I just think it's a destination.
I agree.
Yeah.
And, you know,
T1 target.
based on how you and I chart, here's the RTH chart. Okay.
Yeah. That's the,
Yeah. This is what you and I really look at. I was showing the ETH because it's easier for people to digest, but we have this really big area here between 30 and 44.50.
But right? You can see on every one of these gaps that have been closed, we get a bounce off of them. So there, yes. The other one that we hit the high on, look at the high on like August 2nd. Yeah, right there. Yeah, it played that gap. Like all these gaps do play for the most part. And the only gap that hasn't played is the one from the all-time high.
Oh, up here. Yeah. Which, I mean, who knows? We could be, you know, the thing is you know,
that one too, but we're headed to that one.
Yeah, I agree. And for those people who understand my color coding, the reason that Rob was saying that he thinks that this gets a reaction but doesn't be the end all be all is, technically speaking, all these dailies are tested, right? So they were tested on the 4 hour on the way down. Let's go into the weekly TPO. So I have combined a lot of these weeklies that were overlapping values, and Rob and I kind of discussed this prior. But as you can see, and I want to point out a few things, okay? First and foremost, we have this gap here, right? Which is this gap here, which is all the way up to 54, 51, 50. I think that's what that says. 54.31, excuse me. So we have this gap that's all the way up to 54.31. Also, the other thing that really caught my attention is this is an extremely inefficient part of the market right now. I mean, this needs to be filled in desperately bad. And that goes in conjunction with this. We have a huge weekly bullish imbalance right now, okay? So just thinking about this from a value perspective, we have a huge value area low, right? And then we have our value area. And then we have our value area high. So this thing is very deficient, right? And so just using, you know, basics, I essentially measured this and copied it and moved it up here. And this is essentially our bullish imbalance that takes us up to 54.72, which makes perfect sense because it fills in all of this, it cleans up the gap, and takes us into our higher end targets. Thoughts, Rob?
No, I really like this. I like your just projection sort of gives you an idea of where you can expect it to go because of the balance, and also pointing out the prior week's gap and inefficiency, and Absolutely. Auctions hate that kind of stuff, and so they go back up and fill those areas in.
So this was a huge trade for us on the way down, 55.31. I'm going to pull this over so you can see, but guys, this is the 55.31. Look, boom. Right? Look at this big ass 3 week point of control, because this is 3 weeks put together. And then this is 2 weeks put together. So check this out. I'm going to show you this. So this is this week and this week put together. So I'm like, well, they're overlapping values. Let me put them together. So I put them together, and you still have this huge inefficient node in here. Right? And so this was my final target, if you recall from the long.
Yeah.
Right?
That's
so this is where I'm trying to get to. Now, here's the other thing that I think was really important so that you guys don't miss. 53.42 is the previous week's POC. That's just last week, right? And so remember this, because we're going to get into that. Well, I'll just show you right now. I'll just show you on my 30-minute chart. You know, we have a few spots here in the ES that I'd love to get long. And there's only really one level, or two levels technically, is 53.43. This is a 1 hour untested level right here. It's the previous week's POC. It's also the value area low for Friday, and it is the previous week's volume point of control. So there's a lot of reasons to like 43. Okay. Now, I would not be concerned if they came down and tested 33 as well. Technically, this daily at 53.32 is still untested. And will they come test it? I have no idea. But one thing I do know for sure is I sure like that shoulder. So I won't be concerned If 43 gets some slip and they come down into 33, they may do it in Globex. I don't know, but I can tell you this: I'm certainly going to start at 43, and I'll probably do exactly what I told you guys. Like maybe 5 micros here, 5 micros here. Puts my risk at 20 points. My risk at that point would be I would be in from 35 and I stop at 20. I have a 15-point risk. If we start to gain, then I start to throw more micros on, right? And try and get 30 or 40 of them, whatever. Because we know that our upside targets are absolutely massive, right? And so I think that, I thought it was important to kind of show you guys from a value perspective, point out some higher time frame stuff, show you guys how we have a huge imbalance, a huge inefficiency in here, kind of what we're looking at to the left and how everything really lines up super perfect. So that is my take really on ES and kind of what we're looking at for here. And so I'm going to go ahead and throw this on here. I know this is super messy. There's probably a lot of people like, what the fuck is this shit? But when I kind of put everything on here, this is how it looks. And so you can see if we get above this 80, and I'm going to do it again, right? So below 20, we come down. Above 80, we go up. We can clearly see that we're holding this right here. So our risk is very defined. I'd love to buy into this 33, but really we're talking about 43. And then essentially we kind of move up here. And we have this huge bullish imbalance. And this is where Rob wants to take his first target, which I cannot blame him, right? You got these stacked dailies, right? And then you have the gap fill right here. So really, essentially, as soon as this gap gets filled, you need to be taking profits or looking for potential reaction. And like, one of the things that you said is like, I think this can play and pull us back into like 5,400-ish for the next pop up, which is, totally plausible, Rob. I give you that, right? So, one of the things that I want to make very clear, and then that you pointed out essentially is that even if this area gets a reaction, once you get back above this,
once you get above it, it's over.
You're now in that.
Yeah, now you're.
So this becomes your first target, and this basically up here becomes.
And I like to think like on these big candles, like this 4-hour down candle that from August 1st, the one that really brought us down there. That one. I always think of those candles as fairly inefficient and almost like single prints, and you're usually able to go through those areas fairly quickly.
That makes sense.
Once we get up there.
And let's not forget, our big composite POC and our inefficiency is at 30, 32, let's call it, right? 31.75. That's here, 31.
Yeah.
Right? So, we have every reason to believe that this area is going to get a reaction as well. And it could be the reaction. So I just kind of wanted to show you guys, the thought process and really what we're looking at. And I think this plan, in my opinion, stands firm until we lose 53.20.
Which hopefully isn't Monday.
Then that kind of negates this whole thesis.
Yeah, no, it's all, I think 53.20 is but that's exactly what we're doing here. This is exactly what trading is. It's a bunch of if-then statements when you get to certain places but right now, the mapping is clearly higher.
Absolutely.
That's explicit,
I talked to some people yesterday and Friday, and they're like, oh, this thing's going to dump. I'm buying all kinds of puts and fucking lottos. And I'm like, this is not, you guys, this is not, again, God bless them. Maybe they drop a bomb tomorrow and, I'd hate to see people get hurt, but maybe those puts will pay. But based on the chart that I'm looking at, we have no reason to be looking for any kind of shorts unless you're just scalping these major areas here. So, well, I'll say this: anybody who has watched this again can pretty much negate the whole weekend review because this is my week picture, and my plan is in effect unless we get underneath 53.20. There won't be another.
And even then, I would be fine with a reach.
Me too. Down. Well, this, as you and I both know, this whole area down here, this 0697, this is actually still untested. So this is the weekly leg up that we talked about right here. Mm-hmm. Right? This is the support at 97. And you and I both know how many times this 06 is held up. And this would be a first touch on the weekly. So, I wouldn't be overly concerned. I'm just talking about from a day trading perspective, from a risk to reward perspective. We want to stay above the 20. But like you said, again, for those of you guys who've been paying attention, for me, 53.28 is everything, right? That's this weekly over here. this is everything. So above or below. So even if we pulled back into the 97 and we were able to pop back above 28, I'm right back in it, right? So I just want to make that explicitly clear that, you know, this is still, like you said, even if we take a peek below, it's not over with, right? Because there's still some super high time frame shit over there that's untested. So you can see right here on this ETH daily chart that this weekly at 97 is clearly untested. And so, like just like you said, wouldn't be too overly concerned to come down and play that. And really getting back above this 28, 24, 20, whatever you want to call it area, this is our catalyst for more move up, in my opinion.
I think this thing could really accelerate. We just don't have any catalysts next week, but I still think we're bullish.
Oh, fuck yeah. But like you said, I mean, if we pull back into 97, it's not over.
Oh, no way.
No.
I would be surprised if we backed into whatever Thursday's naked TPO and then fucking rocked it.
Yeah, agreed. Well, Rob, I think that does it. I mean, we've talked about pretty much everything that's happened this week and what we think is going to happen with the market.
Yeah.
Anything you want to throw out there? We good?
No, I thought it was really good. We did see volatility, as you mentioned, coming down on Friday. No more 100-point days. So, you know, might have more time to get on these moves. And, you know, I'm imagining without any great big catalysts this week, it'll be a little bit slower. But yeah, I think we're definitely headed up, and you know, just a matter of catching those moves.
Agreed. Well, thank you for your time, and again, I will see you on Monday, and we will see you guys next weekend.